And we are joined by Mr. Shyam Srinivasan, who's the MD and CEO at Federal Bank. A very good afternoon to you, Mr. Srinivasan. Thank you so much for joining us on ET Now. And let's firstly ask you about your margins number. If you could tell us and explain to us what was the margins for your bank in the quarter gone by, and also how should one see it directionally going ahead into Q2?
Okay, let me begin by saying that the quarter that went by, Q1 is seasonally a slow quarter. We've had an exceptionally good, strong beginning, the most strongest in a long period of time I've seen. Sequential growth, you would have noticed on credit and deposits has been almost near 5%, both businesses sequentially growing. That sets the base for a strong FY24. NII grew 20% and NIMs were at 3.15 for the quarter. We had said that FY24 would be sort of in a year of two halves, with the first half seeing some compression in margins, and we did see that come through. But what is most heartening and encouraging is that the outlook for NIM, for at least for us, looks like Q2 onwards we will start seeing the expansion back, because the pricing on the deposits is now almost at the tail end, and therefore we believe the NIM expansion should start back in Q2.
Right, Mr. Srinivasan, this is Vinny joining in the conversation as well, and a good afternoon to you. So, I also want to understand what changes for you in Q2, what gives you the confidence that the NIMs will actually recover in quarter 2 now?
Well, it's not pressure in Q1, it's just a tail effect or the lagged effect of the pricing differential, the rate passing difference between the credit book getting the pricing upfront and the deposits lagging it. We had said in Q4 as well that we will have 1 quarter more, as in from then, of the impact of the transfer of price, and we believe that has played through in Q1 of FY24. So now from here on, the yield on advances expansion will be higher than the cost of deposits. So the spread opens up again, and we believe, we ended at 315. We expect 7 to 8 basis point improvement in NIM as we go into FY24, second quarter of FY24.
Right. If you could talk to us about how the cost of fund is shaping up for Federal Bank, and also if adding to that, if you could tell us about the competition that you are actually witnessing in the deposit front. What's the trend looking like right now for you?
The last 2-3 weeks, if it's any index of how the pricing is shaping up, I think there's order now. I don't think the price war as it was is escalating. In fact, there are some buckets, some banks have started even cutting prices. So I do believe the peak of the price and rate increase is probably moderating. This is all subject to the fact that there are no, at least near-term increases in repo and stuff like that. That is a call that I'm not factoring in our conversation. But all things being equal, we believe that the rate increase in deposits has started moderating or coming off. As a result of it, the funds should stabilize, and as a consequence of it, the yield expansion on credit will play through into spreads and therefore play through into NIMs.
If you could also just tell us what are your slippages numbers, and what last time there was some bit of a pressure coming in on your agri book. So how are the slippages moving this time now?
Well, I think we've been saying both on slippage and credit cost, it will be amongst the top quartile of banks. Our credit cost for the quarter was about 40 basis points, which is what we had guided for. And our slippages continue to be roughly about 1% of our asset book is what the slippages have been annualized. And that's how it is. This quarter, the overall slippage was about 490 crores, a little over 490 crores. So it's quite consistent with our overall, slippage trajectory. If I recall right, last quarter was about 454 crores. And on an average, roughly in the quarters preceding that, anything between 400 to 450 crores. So I think as FY24 plays through, we will see as the book has grown 20%, and there will always be a year lag on incremental book slippages. So we believe something in the 450 to 500 or in that zone should be our slippages for FY24.
Right. Right, sir. So you have a QIP in the pipeline. If you talk to us about the size, the timing, also the interest that you are witnessing from investors on that.
On none of that, I have any specific comment to offer, except that I'm consistently saying that we are now positioned for a capital raise in FY24. Yes, we are keen to get it done as early as possible. We are working through the details. I think our performance is very much along the lines we've been talking about, and therefore our potential investors should take comfort that the guidance we've offered is being seen in action. So hopefully in the in the weeks or months ahead, we should have a activity. But I am at no point able to commit to anything. But yeah, we are working through.
All right, sir. Thank you so much for joining us on the show, giving us a take on the numbers, the way ahead that you're envisaging for Federal Bank. Thank you so much for explaining and decoding the numbers for our viewers as well.